Hola, buenas tardes. Me llamo Don Cardinal. I'm one of the founders and the former managing director of Financial Data Exchange. For those of you who don't know, it is the data standard for open finance in Canada and the United States. So I'm going to give you a little history before we jump into the presentation. So about 8 years ago, we did a census amongst the banks, credit unions, and investment companies in America, and we said, how many IDs and passwords do you have out there in the hands of fintechs? The number was 140 million. That's a real number. We backed it up and checked it 3 or 4 times. That's an amazing number of IDs and passwords in the hands of unregulated fintechs. Now, at the time, screen scraping, which uses those IDs and passwords, have been going on for about 20 years. It wasn't going anywhere. So we got the banks and the fintechs together and said, hey, listen, if we're going to do this, let's do it securely with customer permissions and with modern enterprise data security. Okay, FDX was born. Some 6 years later, FDX has about 200 members on 4 continents, 114 million consumers sharing data via APIs and not via screen scraping, and roughly 8 billion API transactions a month. This was done with no government money and no regulatory mandate. It's all voluntary. So, and I have family here in Mexico, and so I'm keenly interested in supporting open finance here in Mexico. So when Edgar found out I was leaving FDX, he said, would you like to come down here and speak your mind on how would you do it? Now, I will tell you there's a lot of similarities between my presentation, Eyal's, and Abraham's, and I promise we didn't work together. Now, I feel a bit like I'm in front of the teacher saying, hey, I didn't copy my homework. But the idea is best practices are best practices no matter where you are. So one of the things I recommend doing, shop the planet. There are a lot of jurisdictions who've already built this at internet scale. They're moving millions of pieces of data every day. So it's been tried and true in the hardest environment possible. Brazil, I think, has done really well. EU, UK, Saudi Arabia, believe it or not, is doing incredibly well, and Australia. All this started in Europe under Payment Services Directive 2.0. Kicked it all off, and of course, Britain was first to get going with that. The CMA 9, the Competition Market Authority, told the 9 biggest banks who hold like a 95% market share, hey, go build this. Now imagine you're in front of a whiteboard. They hand you the marker, and they say, all right, I want you to go build this for 11 million people, and you have to get it right the first time. Yeah, no pressure, right? But believe it or not, they got it pretty well right. Now we talk about, let's compare the strategies. We have on one end, market-driven, mostly the US. Now it's not the Wild West, there is some regulation. Across to the highly regulated over in Australia. When you compare that with the innovation that's happening, how many new endpoints are you seeing? What new data types are showing up? What new users, what new fintechs are adopting it? It follows that methodology pretty closely. You can see the US and Canada are the most innovative. Brazil is very innovative. They have open interns as well. Saudi Arabia, then the UK. And as you get more and more government controlled and it becomes more of a compliance check the box exercise, you get less and less innovation. And indeed, if you look up news reports about open finance in Australia and the EU, it didn't quite live up to its promises. Still waiting for adoption. That's a true story. Now, I will tell you, the 114 million adoptions in Canada and US are greater than the total adoptions in Brazil, UK, Europe, Australia, and Saudi combined. Why? Because in a lot of ways, in those jurisdictions that were regulatory-led, they were really a solution in search of a problem instead of asking the market, what pain points are we trying to solve? So our friends in the UK had the courage of the first draft, and they got a lot right. God bless them. They had a central accreditation framework with metrics, and we'll talk a little bit more about what accreditation is and what it isn't. They had an API data standard they based on an existing prototype that came from the US. Again, they shopped the planet. They didn't try to invent the wheel. Never, never, never reinvent the wheel, especially if there's something working. So they brought that in. They brought in a security and authentication standard from the OpenID Foundation called FAPI. It's basically OAuth 2 with layers of security and auth built on top. But they're the first to tell you, when they were building it with nobody else around, there are some things that they wish they had known, they wish they had done. They didn't pay enough attention to market-based problems. What are we really trying to solve here? There weren't enough market participants. You can't just have large banks and large fintechs and a couple of consultants and say it's it. You need small entities, credit unions, you need Casa de Cambios, you need consumer groups, you need trade associations. And yes, I realize getting 200 companies to all agree on something is hurting a lot of cats with some very interesting business models they want to protect. But I will tell you this, you can't move forward unless you do that. Another thing they didn't do is they didn't do conformance testing. They didn't mandate that on their APIs. So the CMA 9, even though they had a blueprint, they implemented it 9 different ways. So let me see if I can fish this out. So unlike USB, you plug it in and it just works everywhere, it was different for every time. So if you were a fintech talking to 9 different banks, you had 9 different translations to go look up. It still wasn't interoperable. Now, I will tell you, the regulators are not engineers, and so the market needs to own technical standards. Finally, there was no framework for liability. Now, they did introduce a 50-50 payment split, like Solomon. They split the baby on that. But it's not really entirely fair because it doesn't really apportion it based on who was guilty. And they only focused on current accounts. That's one of the differences, and you'll see visually, between open banking and open finance. They focus on checking, savings, and credit card. So think about it. I am using an API to pull back my checking account data, but I'm still sharing my ID and password to pull back my auto loan and my mortgage. Am I really any safer? Nope. Now, Brazil and Saudi Arabia came later, so they had the benefit of all these learnings. And indeed, they learned a lot. They did a lot of the same best things. Central accreditation framework with metrics. They used an existing data standard, the security standard. But they had much better collaboration between the government and the players. Everyone who had a stake, including consumers and smalls. And they focused on open finance, not just open banking, including support for the PIX rails. Now, the US and Canada, they have a market-owned data standard. The industry, all of you would have built it. There was collaboration between the government and market, including smaller players. And indeed, they did open finance, not just open banking. The idea is, in a voluntary world, if I want you to stop scraping my data, then my API has to have everything you're scraping in it. But we've missed a few things too. We do not have an accreditation framework, although we believe one is coming in Canada. There is no liability framework other than the agreement that, well, liability should follow the data. Well, that's nice, but what does that mean in practice? So here's the money slide, one of the money slides. What do I recommend based on years of experience? A hybrid model. I think you need a central accreditation framework with metrics, whether you own it with a utility or not-for-profit. I believe the data standard should be market-led. I'm a big proponent of DTX Mexico, and I'll talk about why that will work best for you guys. I believe you should focus on open finance, not just open banking. Otherwise, you're going to leave out a lot of data. Reuse existing security and auth standards. FAPI2 is the gold standard planet-wide. Now, there's a saying in cybersecurity, you don't have to have the best security in the neighborhood, but you cannot afford to have the worst security in the neighborhood. It's a true story. You need a liability framework based on market controls, and you absolutely have to have collaboration between government and market, including smalls. So, okay, that's great. That's 6 bullet points, Don. What does it mean in practice? How do you actually do this? Well, let's first talk about accreditation. All accreditation is permission to operate in a given theater, a given country. So let's think about your cars. You have technical conformance. I know how to drive. I have a driver's license. I have my car inspected for safety. I have my car inspected. And I carry insurance. God forbid I should make a mistake. For open finance, it's very similar. You have to demonstrate technical competence. You have conformance testing of your endpoints or your SDKs. I know what I'm doing talking to your endpoint. 2, you have to have safety. You have to demonstrate you are a safe player. You're either already a regulated entity, or you have an ISO, or SOC 2, PCI, or something that you all agree on is a standard of safety. And then you carry insurance for, God forbid, if there's ever an issue. But that's all you really need. This all can be satisfied via the market as well. Now, I did promise to talk about data standards, and I'm a bit of a homer, so I'm going to talk about open finance. Open banking is this little bit here on the end, over here on the end, checking, savings, and credit cards. But indeed, all this other data is being scraped today in production at scale. You have to account for all of it. When you allow the market to solve problems and you allow smalls and innovative companies and niche companies, you'll have innovation. We're the only standard that has payroll data. We have tax forms, fraud signals. How about that? Wouldn't it be great to deputize all the fintechs and have them share information about pre-fraud before you see a loss? We have that. And indeed, it is the most successful standard in terms of volume on planet. So I highly encourage basing your standards on FDX. So what I recommend for FDX Mexico is think about the efficiency of having the same data standards in Canada, the US, and Mexico. Think about all the business we do all across. Think about, it was Holy Week 3 weeks ago. Think about all the people who go north to do shopping and transfer. 2, it's very easy for a member in Mexico to make changes to the spec. Anyone can change the spec. It's very additive. And indeed, what we did in Canada is we put the spec up on the rack like you do at the mechanic. We went through and said, hey, we need this federally, we need this for this province, we need this for Montreal, for Quebec, we need this for Alberta, and we made changes. So the spec is fit for purpose for all the localizations that was needed. We can do very much the same thing. You have all the advantages of a common interoperable spec, but everything you need for your localizations, for your cultura, is represented in one spec. And best of all, you retain full local sovereignty. In Canada, they have it in writing, so that if they need to make a change, the regulator says, I need this, I need that. And if FDX can't move fast enough, they have the right to ratify an extension or changes to the spec on their own. They are not held captive to anybody else. You need to have full local sovereignty. This is the best hybrid model. Interoperability in largest market on planet Earth, but still full local sovereignty, and all the changes will be made by Mexico. Now, another thing I would do, remember, I said don't reinvent the wheel. Borrow from around the world. Security and auth. The world is on some variant of FAPI. UK, Australia, Saudi, and Brazil mandate FAPI. You have to have it. My expectation is that Canada will mandate FAPI 2.0. Now, the US is on the journey to FAPI, but remember, we have 10,000 banks, credit unions, and investment companies. So they're somewhere along this continuum from OAuth 2 to FAPI 2, and they're moving a lot of people that way. But that is the gold standard. So if I had to recommend from scratch what to build to, absolutely, that's what I would recommend for you. Now, here's the cool part. Here's one thing that doesn't exist anywhere that I recommend. Right now, you see permissions go from a fintech across to a bank, and the bank responds with data, either directly or through an aggregator. What happens if there's a breach? What happens if there's a problem? Well, the customer goes to the bank and says, oh my God, I lost 10,000 pesos, make me whole. And the bank goes, here you go, don't do it again. But the problem is the bank's holding the bag for the losses. They're holding the risk. What if the recipients of data, based on the risk level and volume of data they hold, paid an insurance premium to an insurer so that when there is a loss, the bank makes the customer whole right away. The customer should never suffer. Now, the bank makes a claim against the insurer. Hey, I had a loss I believe was related to open banking, open finance. Now the insurer, as a professional over secure channels, talks to the bank, the aggregator, and the app and says, okay, fellas, what happened? And they forensically go through that and decide, yeah, fintech app, you messed up. And so you're going to have to make the bank whole. Or, nope, sorry, this was a good old-fashioned fraud. There is no Nigerian prince with $1 million. Your customer just, sorry, lo siento. And then you back up the insurer with a reinsurer. No tax dollars are at risk with this model. No deposit insurance scheme is at risk. And here's the cool part. Your premiums will go down the more security you have. Just like when you get airbags and passive restraint for your car, your premiums come down. Same sort of deal. Now the fintechs and the aggregators are incented to have good controls, better controls, a market-balanced system. There is a role for government. You're like, Don, you're an American, it's a big free market kind of guy. There is a role for government, I promise. They're very good at policy and regulation, but not so good at engineering and innovation. Private companies are the opposite. They're great at innovation and engineering, but not so much in policy and regulation. They have shareholders to take care of. So what I recommend a collaboration where the government sets policy outcomes, like there should be transparency, there should be competition, there should be traceability. And I will tell you, if you don't have traceability, you cannot apportion liability. So one of the smart things they did in the US is they mandated the legal entity ID for every player, so that every transaction, every request, I know where the bus has stopped. So if I'm looking for where the crime committed, I know, oh, they didn't stop here, so I don't have to talk to them. So I think that's a wonderful idea, and security. But the government can mandate these outcomes. But here's the cool part. Industry gets to decide how best to do it. Because you can't have the government putting an engineering role on you that's not scalable, it's not affordable, or worse yet, doesn't work. So just tell me what you want. Let me decide how best with my resources, my skill set, and my customer base to serve it, and to do it in a way that I can afford to do it, not just day one, but day two. You know, we have a bad habit of building something and throwing it over the wall to let somebody operationalize it, and you hope you did a good job. So why a hybrid model? Why not free market 100%? Remember, it's the best of all worlds. It gives you innovation. It gives you local control. It lets you cherry pick best practices from around the planet. But it still lets you comply with your law. It still is collaborative. It still lets all of you speak with a single voice. Now, the cool part is it doesn't rely on the government for funding. Right now, the CFPB could go away. Guess what? FDX doesn't receive any money from the CFPB. So what? The technical standard still moves on. So if you're building to a standard, you know it will be around no matter who gets elected, which is why market standards owned by a not-for-profit are so durable. It's why IETF, WC3, FIDO, the USB Coalition, they're all independent entities. And one of the other points I want to make is it puts the customer and companies that they serve in control. At the end of the day, it's about the consumer. It's about the end customer. And if you don't serve your customer, you go out of business. So the idea being you have every incentive to take care of them. And so if you own the technical specs, if you own the standards, if you decide what's going to happen in open banking, you're effectively their proxy. You're the voice of the customer to make sure that happens, which is why we've seen things like thin file and no file customers use cash-based underwriting to help them get better rates on their mortgages. You're seeing recent immigrants, recently divorced spouses, actually have access to banking and markets because of their data they're able to share for the first time ever. Inclusivity is real and can happen in a repeatable, sustainable model with open finance. And I can't stress this enough, it has to be hecho en México para Mexicanos. You can't just transplant an entire stack out of another nation and drop it in like it's a heart transplant. The business culture, the consumer culture, and the regulatory culture are all different. So you have to account for all of that in what you do. Again, you should cherry pick and bring in best practices from around the world. But at the end of the day, you have to have your local sabor, your localizations. We found that out in Canada. We had a very good stack, and you think, well, gosh, you're both English speakers, you're both former British colonies, very similar legal structures. This should be no problem. And yet, when we looked at it, there were localizations we didn't account for, which is why we stood up an FDX working group for Canada and actually went item by item through that to make sure it was fit for purpose and made sure there was a Canadian board and made sure, again, it all worked. I recommend the same for you. You need to be in control. There is no reason Mexico should not have a world-leading open finance regime. You have all the ingredients, as was said earlier. You have some of the smartest people, some of the most dynamic fintechs on the planet. You have banks with a tremendous history and global reach and global roots who are familiar with open banking around the world. There is absolutely nothing stopping you, based on the formula I've given you, to move forward with market-driven standards, build open finance today, with collaboration with the government. Honestly, you've got everything. There's no need to wait. So normally I ask to open to questions, and I know we're a bit behind schedule, so I got asked to compress this a bit. But if you have any questions, I'm willing to take them from the audience. I love hearing from people, but if not, we can do after. Edgar, what would you prefer?
I think we can do after.
Okay. It'll be después. Antes, sorry.
No,
After. Thank you all for your time. Thank you for letting me talk about this. There's a lot more here. I used to teach at university, so I could go full Professor Don in any part of this. So, but there's more to each piece of this, but you have everything you need, and there's nothing stopping you from doing this today. Gracias para todo.